Welcome, everyone, to another episode of The Everyday Trader. This is Greg Jensen, CEO of Options Animal. Glad to be with you today. Beautiful summer day. Glad to be with my friend and partner, Eric Hale, as always.
55 degrees. I feel like I'm in San Diego. So
there you go.
Beautiful. Been too dry here, though. We are in drought conditions. So we're supposed to get rain this weekend, which everybody's looking forward to, but my grass is looking pretty bad. How's your garden doing?
Amazing. And for the opposite reasons of what you have, we have had afternoon thunderstorms roll in every single day for like the past month. I mean, it's actually, I don't even have to water the garden right now. I'm like, it's growing on its own. Putting my tomatoes out tomorrow, actually. I have to wait to put my tomatoes out. I live in a zone that's high enough that until I get to about June 10th, there's always risk of a frost. It'll kill my tomatoes. So they've been growing in my garage.
Under the grow lights? Make sure that's the only thing you got growing under those grow lights.
Hey, I'm it's legal. So whatever is growing there is growing there. Put it that way.
It's legal to grow tomatoes. Yes.
That's right. It's legal to grow tomatoes.
All right. Well, we're not here to talk about horticulture, Greg. We're here to talk about markets and stuff. What's going on? So today is Friday, the 9th, June 9th. We're in a bull market.
We officially are in a bull market, right? We are 20% off the lows that we hit in October. And therefore, from a technical definition standpoint, we are in a bull market. Now, I will say this. I'm still skeptical of this bullish market having any type of legs behind it, because I don't feel like we've resolved the underlying problems yet. Specifically, the reason we sold off last year and we're in a bear market was inflation, driven mostly by money supply that was pumped in through Treasury, and also that the Fed had 0% interest rate policy and printed a whole bunch of money during COVID. But our policies haven't changed yet. And although, other than the Fed has raised rates, so we are changing it on the monetary side, we haven't changed policy on Treasury's side. And in fact, our agreement that we came to avoid the debt ceiling debacle kind of made it so that Treasury side of things will be indefinite. We're not going to slow spending. We're not going to raise taxes. Things are still inflationary pressure. And so that's why I say I'm not going to fight the trend. The trend is bullish right now. You have to be optimistic about some of the big advances, particularly in artificial intelligence. But I am going to be skeptical about the longevity of this bullish move, because I just don't feel the underlying issue in the fact that everyone's betting that the Federal Reserve is going to either pause or what's the word again? Not pause. Pause is the word that Waller said he won't do.
Yeah, we're going to skip.
Skip. That's the word.
Yeah.
The market's betting that's going to happen next week at the Fed meeting. I don't know if they will or not. I don't know what your opinion is, if you think we're going to skip or pause or hike, but I still think there's more hikes. I'm in the higher for longer camp still, that I think we've got a lot more quarter point rate increases coming, because I don't think we've fixed inflation. So can the market still be bullish if the Fed continues to be higher for longer? That's the question. What's your opinion?
I am bullish. I think let's tackle a couple of those things at once, or at the same, or one at a time, I guess, not at the same time. But we talked about M2 money supply. This is how much cash is flowing around in the markets, and we dumped a whole ton. Here's from Fred. Here's the COVID cash that we just dumped into the market, and you can see that it's starting to work off. We're pulling M2 money supply out, and this Wall Street Journal article goes to this paper by Olivier Blanchard and Ben Bernanke. Bernanke. Do you know what I'm talking about?
Bernanke?
Somebody referred to him, one of the congressmen. I actually know who it was. I don't want to say her name, but she said, and Ben Bernanke. Anyways, whatever. But a big part of it was due to just the overall sheer number of cash this M2 money supply that we dumped in. The paper identifies that money supply, which should grow at 4 to 5% a year to achieve a 2% inflation. It rose at 15% between March 2020 and May 2020. So we've got a lot of excess cash that needs to just come out of the system. And it is. Now, there was another article that was by Lombard, T.S. Lombard, talking about M2 money supply and pulling it out. It does matter, but what they're alluding to is that this money is not where it traditionally is, and that it's the Fed and the Treasury lending it to banks. I don't know. I didn't read the whole thing. It's actually, gets a little bit wonky on here, but definitely part of the problem is that money supply. I am overall bullish though. So going back full circle to your question, I think what we're seeing happen here recently in the S&P 500 is a very bullish move that we've seen that's correlated with some resolution of some very big issues. Specifically, the banking crisis, which was just a few months ago, seemed like the end of the world, and those issues seem to be behind us, as well as the debt ceiling. And I'll be honest with you, I was way more pessimistic on our ability to resolve that. And I think there's nothing clearer than looking at the VIX futures that shows this massive decay. We've been talking for weeks about how sticky the VIX futures have been and staying very high. Even with the VIX coming down, the VIX futures staying high until right here, which is exactly when McCarthy on May 26th is when the McCarthy Biden meeting was, where they came out and they said, yes, we've come to a agreement in principle, and we've seen nothing but progress since then. And we've seen these VIX futures just crash back down. So I think for the next 6 months, I'm a firm believer in this bullish market. I think we are in a bullish market. It's interesting how we've climbed this, I would describe as a wall of worry, as we've come to get up here and get above this. Well, this is the SPY, but let's use the SPX just to get the numbers right. We've been talking about this level, this 42, I should not 4 SPX dollar sign. We've talked about this 42 level as being a critical level of resistance, and we broke through. We had trouble getting a close above that, and when we had, my belief is once we get a close above that, we're gonna tear higher, and the path of least resistance is up. And so today we're playing with this 4,300 level, which is the next perceived level, technical level of resistance. I think if we get it close above that, I think the path of least resistance is higher, and at least that's what we're seeing in the VIX futures. In the various VIX risk premia out there are just crashing down. Volatility, implied volatilities are crashing down, indicating a level of comfort in the future. And this is smooth sailing through the rest of the year. That said, we talked about the Fed raising rates. You and I were talking, was it a skip or is it a pause? Whatever you call it. Right now, the market is pricing in that we're going to not raise rates. There's a 27% chance that we announce a quarter point raise next meeting. But if we go to the July meeting, the probability is of some sort of an increase is 67%. So that's your skip. I don't know. It's hard for me to tell because the only data point that would impact the Fed's decision, we have a very important data point next Tuesday. We have CPI coming out on Tuesday. And I guess given yesterday's jobless claims showing that they were higher than expected, so there's some challenges in the labor market. And that's, I think, as long as we have a very, very strong labor market, the Fed is free to raise rates without significant consequence. Yes, it'll move the market, but I think overall the economy will do fine as long as labor is strong. So I think the Fed can raise rates. So, I think, I guess they can take solace in that. I mean, there's people who are going to be arguing, hey, labor's getting tough. We had this number, this was at 265 in the unemployment claims, which is 35,000 higher than anticipated. So they might say, hey, let's just skip this one and see how the lagging effects of what we've done play out. I guess right now, I would say my probability would be a 50-50 that we raise rates next week. So Tuesday, when the meeting starts, the CPI report comes out. My belief is that even if unless there's a really, really hot reversal, that if inflation makes a big jump up, we're probably going to skip next week. Part of the reason is I think the Fed has already, all of the Fed voters, the decisions aren't made in a vacuum. There's committees that each one of the regional Fed offices get together. They meet with their research departments, and there's lots of input, and they debate what their position's going to be. The statements are all written by each of the people. All of their comments are correlated, and that's all done by now, right? So, or by latest by Monday. So they all get on plane, they go to the Eccles building to meet in DC, and then they have their meeting. So while they're at their meeting, they're going to get a CPI report that comes out on Tuesday. If the number is really, really high, there's going to be a scramble. I think if it's low or going down, we're on a skip. What are your thoughts?
I think it's going to be low and coming down and be a skip. Now, I know I may sound like I'm saying the opposite of what I said earlier. I think the lagging effect is in place specifically in housing, and we're going to see a weaker rent of shelter cost that's going to have our CPI number be lower. But that's the one that I actually think will turn around again later in the year, and where we're going to see a spike in inflation again, because what I'm seeing in the real estate market, at least in the markets I'm paying attention to, is home prices are resurging again. And we're seeing affordability problems creep in again for people who are looking at buying homes. I actually think we're going to see inflation rear its head again. Maybe not this year. It may not be towards the end of the year. So I agree with you. There's a potential to be optimistic in the short term. But if you will, go to stock charts for me and open up a chart from January of 2000. So January 1 of 2000 to December 31 of 2003. So it's going to be a 4-year chart. So January 1 of 2000 not 2001. Sorry.
Through what?
Through December 31 of 2003.
Is the 30th good enough?
That's fine. Actually, that's June 30th, though. I want to see when the bullish market finally takes off, which isn't until the second half of that year. So go to, instead of June of 2003, go to December.
This is December.
There you go. Sorry, it was just lagging a little bit on our screen. So yeah, update that chart. So the reason I want to point this out is notice in this 3-year sell-off where we went from about 1,600 on the S&P was the high back in 2000. This was the internet bubble. And I know this is the S&P, not the NASDAQ. The NASDAQ is way more drastic than this. But in this 4-year sell-off, basically 3-year sell-off that we had, there were 4 different occasions where the market rallied 20% and entered a bullish market from a technicality standpoint of the definition of a bullish market, only to turn and roll over. If I had to personally make an opinion of where I think we are, if this is a similar market, because I've said this for this whole 2022 bearish market, as I always said, this is not 2008. This is 2000 to me. We don't have a massive financial crisis. We have a market where there's too much money and we are overvalued. Stocks are not sanely valued right now for their future revenue. That's what happened in the internet bubble. I believe that's happening again right now with artificial intelligence. And so in each one of these cases, if I had to say where I think we are right now, I think this rally that we just experienced off the October lows to now is about September to October of 2001. So we're kind of right in the middle of that. I believe we've got another rollover coming because as of right now, there are 34 stocks of the S&P 500 that trade at greater than 10 times sales. You know, it's not 10%, but it's about 50, or it's about 8-9% of the S&P 500 trade at greater than 10 times sales, which is an insanely high valuation. That's not talking about earnings numbers. And some big names on that, like Intuitive Surgical and MasterCard and Visa and the Chicago Mercantile Exchange and NVIDIA and Microsoft and Adobe, just some big names trading at really high valuations that in the short term, I agree. I'm a bull until the recession finally hits. Now, I know we were talking a little bit beforehand that Goldman Sachs has changed their opinion on the potential for a recession. I think they dropped that number down to 25% that a recession will actually hit or not this year. I'm still in the camp that we are going to enter a recession eventually because of what the Fed's going to continue to do. I think the Fed's going to be higher for longer, and I think it will eventually push us into recession. The recession may not come this year. Maybe if it does, it's the latter part of the year, but I think we're more looking at a recession first part of next year. I know it's probably going to be one of our big discussion points that we'll be talking about at the Austin Summit that we're doing here in a couple of weeks for the Options Animal members down in Austin, Texas, is what that recession is going to look like, how you can trade through it, what stocks you can maybe look at parking your money into to get through that recession. Again, if it comes, maybe it won't. Like we were talking before, Goldman's have the opinion that's only a 1 in 4 chance now that we're going to hit recession.
Well, I think we're all 100% chance we hit recession. It's like death and taxes. You can't avoid it. We're going to have one. So it's just a matter of when. I think it's a very low probability that we're going to have one this year. Although the second half of the year, I'm very concerned about, what can happen economically, especially the student debt thing. UBS did a report. I don't know if you saw that. I haven't. I shared it on Trader Oasis. There's a UBS report that did a really deep dive into student debt as to who has it and how much is it exactly, helps to put it in is it bigger than a bread box kind of thing. And it's a really phenomenal report because they do a deep dive into the demographics of who actually has the debt. How old are they? How much do they make? And it goes even deeper than that and actually looks at the average credit card balance. And it even goes deeper and looks at like what brands and where they spend their money. And I'll tell you that I'll tip my cards ahead of time. I would be bearish on Nike the second half of the year. 38% of all all student debt holders have acknowledged purchasing in the past year a Nike product. And I think what's going to happen, it's a lot of these soft goods and the soft good retailers that like Kohl's and some of these other products that, Nike is, if you need a new pair of running shoes, if you put it off 6 months, isn't a big deal. It's not a big deal to you, but if you get, a huge percentage of the market, the people who do spend a lot of time buying Nike products fall right in that demographic, the overlap of who buys Nike products with a regular, some sort of periodicity or frequency. Those people are the same people that have this exorbitant. That's the other thing too, is they have credit card debt that's twice the average. So you've got people that are maxed out on their credit cards that are going to have, this is one thing I got to get down. I've seen different numbers from 2 different places, or 3 different numbers. I've seen an average of 250, 400, and 500 is monthly student debt. And so I'm going to do a deep dive. We're in Austin to talk a little bit more about these demographics, how they can play out, what would be the key indicators that we'd look at, and who are the companies that are going to do well and who are going to do poor. And I think that's I'll give full credit to Michael Drury from McVane for pointing out that issue. I do think it's going to be significant the latter half of the year. So
I think Netflix is going to be another one of those companies that's going to fall into that. And I know Netflix reported some good metrics today, actually, saying that they've had more subscriber growth in the last 4 years, or currently, than they have in the last 4 years, since they've locked down on their password sharing, which I think has been a good thing for Netflix in the short term to drive subscriber base. But when those student loan payments that you're talking about all of a sudden are required to be being paid, I know Netflix is an easy one, at least I would assume would be an easy one on most people's list to say, yeah, I got to cut Netflix. Maybe not. Maybe that's a necessity for the younger generation. But I know Netflix has had an enormous move off the bottom that they hit in July of last year. About a year ago, Netflix was, $180, $170 a share, and it's at $423 today, up another 3.33% after their positive news. And, they're not back to their all-time highs of 700 that they hit back in 2021, but they've gained an enormous portion of it back with the big move that Netflix has had today. So, we'll see.
Here's the year-to-date quilt of performance. Look, it's just stunning. Tesla up 98% from January 1st.
Mega cap tech for sure.
Yeah. So
Meta up 119, Nvidia up 164.
Wow.
Huge moves.
Huge. That's all happened in the past month, right? What's the 1 month performance? Yeah. Well, I guess it hasn't all been in the past month.
No, it's been most of this bullish move off the lows from October, to be honest, has been driven by, in fact, I got sent, you may have been copied on the email. Yeah, he sent it to you as well. Scott, a friend of ours, and a student at Options Animals, sent us a chart talking about the top 8 weight of the S&P gains this year. That most of the S&P's gains, like 98%. I'm just trying to look at
that's Bianco's chart, by the way.
Oh, is it Bianco's chart? Oh, it is Bianco's chart. I'm seeing Bianco's copy right there, right there at the bottom of it. Yeah, it's Facebook, Apple, Amazon, Netflix, Google, Nvidia, Tesla, Microsoft. We got to come up with I actually came up with an interesting acronym for that yesterday. I'm like, we got to get away from the FANG plus MMT. And if we add one more name to it, and I thought, you know what, if we add an E to it, which you throw on ExxonMobil, I know that's an X technically, but E starts with, actually, they're down for the year. If we find an E somewhere, we can rename this to Man Magnet. We just need an E. We could redo it. Man Magnet.
That's my wife. She's a man. No. Never mind. I don't know where we go with that. I don't know.
Well, trade with the trend is, right? Right now it is up. We'll deal with the recession when it comes.
I'm a believer that we're going to be bullish. We're going to go higher from here, at least for the next 3 to 6 months. People are going to fight the wall of worry, and there's never a shortage of reasons to be bearish. But I just go back to this thing here, which has been the argument for the past 3 to 6 months. This debt ceiling is going to be a problem. The debt ceiling is resolved. The risk premium is really low. It's almost scary low seeing the VIX. Look at the VIX down here, 13.89. If we go back 5 years, we got to go back 5 years to get to a lower print. Well, you got to go back to right before COVID.
I was going to say, yeah, we're down to pre-COVID levels on the VIX.
Yeah. I know people point this out, say, well, look how low it was before it went up. Yeah, well, whatever. This low VIX didn't cause the COVID crisis, but we do tend to see the VIX, very low before we get big moves up, and it's usually the elevator up and stairs down that it comes down. So there is argument to be looking at possible hedge trades. I'll be honest with you, I have looked at some really interesting, like out of the money put spreads that are really, really cheap and, huge payoff if you get this big move down. I've been seeing some of the newsletters that I follow talk about, buy insurance when you don't need it, when it's cheap.
Right.
There's something to be said for that. But right now I'm not actually, I unwound all my hedges last week. I had a whole bunch of hedges in place because I wasn't confident that we were going to make progress on this debt ceiling thing, but I unwound them all last week.
I did for the most part too, other than I didn't roll my covered call on the Qs out of the money. I still rolled it. It's still in the money. I'm still going to let that one get assigned. I've got a nice profit.
But you're going to make money on it, right?
Oh yeah, I'll make money on it. I'm just going to let it get assigned and taken away. I'm not going to chase it up.
Okay, here's a curveball that I know, but I know you're always good on your feet. We didn't talk about this ahead of time. What did you think about Apple's new product?
Ooh. I actually think it was really cool. I mean, it's the question, and I actually read an article yesterday, and I don't remember if it was on Twitter or where I was reading yesterday. One of the winners I actually think that could come from the Vision Pro, maybe Meta in the short term.
You were going to say that,
to be honest, because it's so expensive. I mean, I look at what Apple's doing, and if Apple can take this more mainstream, and not saying that Meta is not mainstream, they are, but if we continue, I know my kids love their Oculus.
Do they?
They're on the Oculus all the time. I'm sure
Apple's sitting in the box. I've been sitting over here for 3 months untouched.
Your Oculus is?
And I hear that from a lot of people. I'm amazed at how many people have said they're going to buy this thing at $3,500. You can buy 12 Oculuses or 11 and a half Oculuses. 11 and a half. So, buy 10 and have 1.5 left over. I mean, this thing's outrageously expensive. I mean, a 2-hour battery life.
I'm not going to buy it.
It doesn't connect to the internet. I mean, it doesn't connect. It only connects by Wi-Fi, has no cellular built into it. The whole thing that was interesting when I first saw it, I know you did too. When you looked at it, you're like, oh, you can see through these like goggles. That's a screen on the front of this thing. So it's got cameras inside that are pointing at your eyes. And then what's on the outside of this thing is a screen projecting forward what it sees your eyes doing. I don't know. How important is that? So that other people outside can see what your eyes are doing. I mean, from what I've heard from, who's his name? Marcus Greenlee. Is that his name right?
Yeah, I think you're right.
The guy that the tech reporter, Marcus. No,
no, it's not Greenlee. It's we were talking about other Marcuses right before this, so that's the name stuck in my head. I don't remember.
You know what I'm talking about, right? Black guy. He's a tech review. He does awesome reviews. And he made a comment. He said, this thing's the closest thing to magic he's ever seen. He had 30 minutes with it. And so it works based on your eyeballs tracking. So you look at something and then you go like this with your finger. And
Brownlee.
What's that?
Brownlee.
Marcus Brownlee.
Brownlee, because that wasn't Greenlee. I'm like, it's not right. It's Brownlee.
I said Marquise Brownlee. There we go. Yeah. Or is it Marcus? Which is he does a really good job reviewing. I like his videos, and he said it's the closest thing to magic. That when you he says if you tap your fingers, that's the click. So the cameras outside the device can see what you're doing over here. And he said one time his fingers touched and he ended up clicking by accident. It's interesting, but $3,500. It's just have a hard time. And I'm amazed at how many people have come out and said, oh, I'm going to buy one. I'm going to buy one. Why? And so I can watch movies. Well, you can watch movies on an Oculus right now on a plane. I don't know.
Okay, I'm going to throw you a curveball now. Completely different subject. If Jamie Dimon runs for president on the Democratic ticket, would you vote Democrat?
No, but I would go for RFK Jr.
Well, he's on the ticket already. Well, he's running again. He's not officially on the ticket yet, right? But has he officially said he's running?
I'm not. I don't think they're going to be. They're talking about not having a Democratic primary.
Are they? Okay.
No.
I know the Democratic Party because they've got the sitting president. They don't. You have the ability to not open up and do a primary, right? They can just say, no, we're going to support our sitting president.
Right. Yeah, I have no idea. It depends on who they're running against. If it's the orange guy, probably yes. I would pick Diamond over the orange guy. Orange bad man.
Isn't the orange guy going to jail?
Yeah, he got indicted.
He got indicted yesterday, so guess we'll see.
Lots of drama. Yeah.
Well, market's bullish. I'm looking forward to seeing you a couple weeks, my friend.
All right, you too.
We'll see you in Texas. Thanks everyone for joining us. Don't forget, like and subscribe, share with your friends, and we'll look forward to seeing you all in the next one. Thanks, everybody.
Later, dude.